Welcome to another Personal Finance Friday, and today we're talking about long-term care insurance. So stick with us, we'll be right back. Welcome back, everybody. Today we're talking about long-term care insurance on Personal Finance Fridays. Let's say up front that long-term care insurance is a very complex topic, and there's simply no way to cover all the twists and turns of long-term care and how it integrates into your financial plan in a short video. If you decide you're interested in long-term care, be sure to talk to a fee-only financial planner about it and how it integrates into your long-term financial plan. You're looking at potentially a lot of money here in the long term. The cost for long-term care insurance and the benefits from it could easily outweigh what you paid for your house. So this is not something to mess around with. Get professional help. So with that said, let's get into it. When you get to a point where you can't take care of yourself and you don't have somebody readily at hand that's willing and or able to do it for you, you're going to have to pay someone to be there to help you. Now, to do that, long-term care insurance can help pay that bill. But what does it mean when we say not be able to take care of yourself? The industry has a phrase for this called activities of daily living, or ADLs. Those 6 things are bathing, dressing, eating, caring for incontinence, toileting, which is getting on or off the toilet, or transferring, which is getting in or out of bed to a chair or to the sofa. When you can't do at least 2 of those activities of daily living, or if you have dementia or some other cognitive impairment, long-term care insurance may be available to help pay for a caregiver to come and help you do these things. Of course, there will be paperwork and doctors involved, but there's no avoiding that. So if long-term care insurance can help pay for this assistance in doing these activities of daily living, what choices do you have? Well, there are 2 types of long-term care insurance: traditional long-term care insurance and hybrid long-term care insurance. Traditional is pretty much what it sounds, a standard insurance policy that's for long-term care, obviously, but it's particularly just for that. You pay for it either upfront in a lump sum or over time, and that's it. If you never use it, the lump sum upfront is gone. If you pay over time and let the policy lapse, it's also gone. But that's typical of other types of insurance policies. With a traditional plan, premiums can go up if you're paying over time. Traditional plans are getting harder to find, though, as the number of carriers who offer those traditional plans is getting smaller. Now, with any long-term care, traditional or the hybrid that we'll get to, there are lots and lots of possible options for these. Whether that's an inflation protection rider or cost of living adjustments, variations in how long it takes for the long-term care insurance to kick in, the daily benefit amounts, all that kind of stuff. All of these are options available on both types of long-term care insurance. So with all those options, you'll want a professional to walk you through these so that you don't make a decision or not choose an option that you really would have wanted later. Hybrid policies are just whole or universal life insurance policies that have a special long-term care rider attached to them. And what that rider does is it allows you to tap into the death benefit that you've purchased in the policy to pay for long-term care should you need that. The trick is to choose a large enough death benefit to cover any projected need for long-term care, since that'll be the maximum the policy will pay. Hybrid long-term care policies can be purchased in much the same way as traditional ones, in that you can pay a lump sum up front, just a big wad of cash up front all at once and it's done, or you can pay over time. The nice thing is if you choose to pay over time, the premiums are fixed, so you don't worry about them going up on you while you're paying for the policy over that period of time. The downside is, of course, what I just previously mentioned, is that you have to set the death benefit, which is also the long-term care benefit, in advance, and you're stuck with that going forward. Now, there are some other options on the hybrid policies that do have adjustments in the price and in the value of the long-term care rider for things like inflation protection. But those cost more, which will make your premium higher. A benefit of the hybrid policy is if you don't end up using it for long-term care, say if you pass away suddenly, then the death benefit goes to your beneficiary like any other life insurance policy. Also, like some whole or universal life policies, if you stop paying, you may or may not lose the policy completely. Depending on the contract that you've signed and the riders that you've turned on, you may be able to stop paying premiums at a certain point and have the insurance continue for you permanently. Now, do you want long-term care coverage at all? Or do you need it? Well, I mean, if you're staggeringly rich, or even just mildly rich by my standards, You may be able to self-insure, which means you can pay for your care out of your own pocket and not have to worry about it. The vast majority of the rest of us don't have that option. We don't have those kinds of resources to both be able to retire and set a big pile away just for long-term care, whether we use it or not. If you've saved and invested over the years and built up a big enough nest egg, you might be able to self-insure for one of you, but not necessarily for both yourself and your spouse. And even still, even if you had it, it may deplete your resources to such an extent that there wouldn't be anything left for the surviving spouse. There are a huge variety of long-term care policies available out there. There are even some that will let you do what sounds like a first to die policy, but it's a first to use it, in the sense that the policy covers both spouses, but only the first one to need it actually gets to use it. The remaining spouse would then self-insure from their remaining invested assets. So ultimately the question is do you need long-term care insurance or not? Well, again, if you're rich, maybe not. Talk to your financial planner and see where you are in terms of being able to self-insure. You may not, if you don't have those kind of resources, you may not need it yet, depending on your age and health. But at some point, if you're a typical middle income earner, you may want to consider long-term care insurance depending on what the rest of your savings looks like. Remember, talk to a fee-only financial planner first. Look at your whole financial plan and what the costs of the long-term care, not the insurance, but the care, might cost you in a typical scenario. See how that fits in your financial plan, and they can tell you whether or not long-term care insurance would be a good idea. If it's determined that it's recommended for you, then they can put you in touch with a long-term care specialist that would be able to treat you right and make sure that the policy is specifically constructed for you and your needs. All right, that's a quick overview of long-term care insurance and the possibilities. If you have any questions, leave them in the comments below, of course. As always, please feel free, click subscribe and like. Share this with your friends if you think it would be of use to them. See you next week. Thanks.